Good morning, everyone. Thank you for joining us today. My name is Draksha Siddiqui, and I will be your host for this webinar on strengthening financial audits, identifying and preventing common tax compliances issues. So, before we dive into the session, let me provide a brief introduction to our company. So, ACME Group has established itself as a trusted tax and financial solutions provider across the GCC region and Egypt. And we are committed to delivering high quality solutions tailored to the needs of various businesses across different industries. Our focus on quality and expertise has allowed us to build long term relations with our clients. So, our exceptional team consistently delivers value efficiently, making us the preferred service provider in the region. So now let me introduce our esteemed speaker for today's webinar, Mr. Taimur Khattar. Mr. Taimur is an experienced audit manager and tax consultant with over 6 years of expertise in accounting, auditing, tax compliance, budgeting, and financial reporting. He holds a BSc in Applied Accounting and is a Certified Accounting Technicians, CAT, CAT, and ACCA member. So Mr. Taimur excels in managing accounting operations, performing audits, and ensuring VAT compliance. His skills in evaluating internal controls and resolving tax queries make him a trusted advisor, providing valuable recommendation to enhance clients' financial practices. This is what Mr. Taimur does. And before we start, I encourage everyone in the audience to share your questions in the Q&A sections. So this will help create an interactive session and ensure that you gain maximum value from today's webinar. So your participation is essential to the success of this event. Now I would like to hand over the stage to Mr. Taimur Khattak to begin the webinar. Mr. Taimur Khattak.
Hi, Diraksha. Thanks for using the kind words. As today's webinar is about strengthening the financial audit processes and identifying the common tax compliance issues and trying to prevent it in the first place. So, with this, we'll move to the table of contents, which, like today's webinar, we'll be discussing the importance of financial audit, um, how we can achieve the tax reconciliations, what is the importance of what is the importance if there is a misreporting in income tax, and showing wrong revenue in the financials, if it leads to further compliance issues, and the importance of maintaining supporting documentation. With that, we'll just jump into the webinar. Mozam, can you please take us to the next slide? So with our first slide, we'll be talking about the importance of financial audit, as it's like a key pillar for governance, and that ensures like kind of transparency and compliance with the regulatory bodies and the laws. Considering we are based in UAE, so with UAE laws, it has been further divided into 5 categories. One, that it detects and the discrepancies and any anomalies in the early stage, in the very beginning, and that prevents us, from paying further penalties. The second point is it aligns financial records with the VAT, excise tax, and corporate tax regulations. Third is it encourages robust documentation internally, and makes sure that internal controls are robust and effective in the company. The fourth point is it provides reliable data for management and for management to make decisions, along with that also for the investors. The fifth point is it facilitates the smooth dealing with tax authorities, like FTA and Ministry of Finance if required. Mozam, can you please take us to next slide? So when it comes to misreporting of income, there could be different or various reasons which could lead us to misreport the revenue. For example, incomplete invoicing, a situation where the services have been rendered without corresponding invoices being issued. So this could be one of the reasons. Another reason could be foreign income exclusion and not considering all of the income that is coming from other countries or overseas. Undocumented receipts. So if we have received different set of amounts in the bank, which is sort of undocumented, it might be considered as income, but in reality, it might not be. The timing manipulation could be the fourth reason, because sometimes people accelerate in either recognizing revenue, which ultimately overstates the revenue amount, or in some cases they uh, delay the invoice issuance process and record it in the next period, which ultimately will affect either overstate or understate the revenue. And the non-operational revenue, sometimes it is being ignored. The revenue which is received from the interest, or if an asset of the company has been sold. So sometimes it is being ignored, which ultimately affects the total accuracy of the revenue. As an example, we have like a tech firm which delays the invoicing on a project beyond the tax year to avoid exceeding a revenue threshold, triggering a compliance review. So for that, I mean, these kind of scenarios do exist where they delay the invoicing process to make sure they do not cross some certain threshold. um, to maintain that threshold, they basically misreport the revenue, and of course it can trigger the compliance issues and audits. When it comes to financial audits, one of the processes, the invoices being issued closer to the cutoff date, before and after, should be made sure that which period they belongs to. Muslim, next slide. So there are some common tax errors which are discovered during the financial audit process. As we discussed earlier, underreporting revenue, income from side activities, maybe interest on loan, or maybe selling a fixed asset, or international sources often gets missed. Uh, the second one is expense misclassification, mistaking personal or non-deductible expenses as business-related expenses. I've seen various times where the personal accommodation rental expense of the bosses have been considered as the business expense, which is wrong. So this is one of the reasons. When it comes to VAT filing discrepancies, frequent mistakes in VAT returns, submissions, and calculations. This is also one of the issues. Incorrect payroll handling, misclassification of employees, or omission of deductions, misapplication of tax rates, failure to apply current or correct tax rate. When it comes to missing documentation, lack of proper deductions or reported income. Ideally, it is expected to. I mean, legally, we are all expected to maintain the documentation for 5 years, but ideally, it should be 7 years. Um, I mean, that's more advisable. Muslim, next slide. So, corporate tax compliance issues. Failure to maintain proper books in accordance with UAE corporate tax laws. But this is one of the compliance issue. Inaccurate taxable income computation due to misclassification. Once we start misclassifying the revenues and expenses, inaccuracy is bound to happen when it comes to taxable income. Uh, the third point is missing or incomplete documentation to substantiate tax deductions. Any deductions uh, for sure needs to have certain proof of documentation, and I mean the whole situation behind it. Not applying exemptions thresholds correctly for small businesses. So as we mentioned earlier, that just to maintain some certain threshold, for example, let's say under 3 million turnover of the companies are considered as small business. Small business relief is allowed. So assuming just to maintain the small business relief status, if the companies either accelerate or like delay the invoicing process to make sure that their turnover is less than 3 million annually, um, it it will lead to a compliance issue if it's being done intentionally. Late filing or failure to register for corporate tax when required. For example, a consultancy firm misclassified revenue, leading to an inflated taxable income and higher tax liability. Muslim, next slide. So, what is the main impact of revenue and expenses misclassification? Leads to incorrect VAT input claims and output VAT calculations. It kind of distorts the taxable profit for corporate tax. It may cause disallowance for deductions or misapplication of the tax rates. It affects the financial ratios and business decision making. So when it comes to recommendation, a company needs to adopt a clear tax coding and expense allocation system. So once a coding is there, it becomes really easy to identify, because that means certain set of expenses will have certain number of coding. So finding, where which head the expense belongs to, it becomes easier. And same happens with the revenue as well. Muslim, next slide. So importance of supporting documentation. It helps us maintaining the audit trail and reliability. Clear records enhance the credibility of financial statements. For justification of deductions, of course, as we mentioned, we need supporting documents, so it also helps us there. Every tax deduction needs corresponding proof. Receipt and invoices must match expense reports and ledger entries. So even later, if someone wants to double check or cross check the expense reports or ledger entries, once the receipts and invoices have been maintained as supporting documents, it can be easily checked. Um, Contracts and agreements, backup revenue recognition, liabilities, and assets, these things can also be performed. Uh, a tip is maintaining digital archives with indexing for fast retrieval during audit cycles. So it is also very important to make sure that indexing has been done while maintaining the supporting documents. So it becomes easy for the accountants to figure it out. Which document is where and belongs to which period. Mazum, next slide. With this, we head up to our first poll question, which is what is the frequent cause of VAT non-compliance in UAE audits? Your time starts now, which is 30 seconds. If you guys can see your chat box, you might find the question and the options to answer. So the time is up. 61% people have responded for missing VAT invoices, which is the correct answer. With that, Muslim, can you please take us to the next slide? Importance of strong supporting documentation. Audit trail credibility depends on organized and accessible documents. When it comes to VAT invoices, contracts, back taxable supplies, and expenses. So those VAT invoices and contracts for sure needs to be maintained. Um, Customs and import documentation support excise tax compliance. Corporate tax deductions required detailed expenses, records, and agreements. Digital archiving enhances audit readiness and retrieval speed. Muslim, can you please take us to the next slide? Pre-audit readiness checklist for UAE businesses, confirming VAT registration and compliance with filing deadlines. This is one of the checklists that the company needs to make sure. The second one is uh, reviewing corporate tax registrations and prior year filings to make sure, the prior year filing is in line and is correct also, and no further adjustment or disclosure is required. Ensuring all excise goods, stock and movements record are maintained. That can be done by comparing what the portal is showing and what is maintained in the system. Reconciling accounting records with all tax returns filed either monthly or quarterly. Training staff on UAE tax specific rules and documentation requirements. Establishing a risk register of known tax issues. So this is very important. Moves on next slide. Building a robust pre-audit tax review process. For that, we need to conduct periodic internal reviews focusing on VAT, excise, and corporate tax. Um, Also, we need to make sure that the document findings and remedial actions comprehensively using standardized UE text checklist for common audit issues. So we need to come up with like a standard list of standard checklist. So nothing is missed, and every we need to make sure that everything is being in the pre-audit stage, everything is being reviewed at least. Uh, Other than that, communicating the audit preparation timelines across departments inside the company and engaging tax advisors for compliance complex areas. If there's any, if I mean, depending on the nature the company is operating in or dealing in, if they have any complex scenarios or situations, then consulting with the advisor for sure is a good strategy. Muslim, next slide. Internal controls for UAE tax compliance, segregating duties between bookkeeping, tax filing, and approval. Configuring the ERP systems to automatically apply correct VAT and excise tax rates if the system allows. Um, Implementing mandatory approval workflows for tax-sensitive transactions, continuous monitoring via dashboard for anomalies or missed filings, maintaining audit trails for all the tax-related entries. Um, Mosem, next slide. So this is the time to second poll question. Which expenses typically disallowed for VAT input claims? Your time starts now. Muslim, it's stuck. It's not moving. So the time's up. 92% people have answered correctly that personal mobile phone bills are not allowed for input VAT claims, and not just personal mobile phone bills, but any personal expense. We're not allowed to claim the input for. Muslim, next slide. Okay, for VAT invoice documentation failure kind of issues, where the proper documentation has not been maintained. A trading company failed to maintain valid VAT invoices for certain purchases. FTA disallowed input VAT claims totaling AED 500,000, and this resulted in additional tax payment plus fines and interest. So it's, I mean, as you can see, these things can lead up to fine. So we need to be very much careful about it. And for us, a tip is establishing strict invoice management protocols as much as possible. Awesome. Next slide. So for technology solutions for UAE tax compliance, documenting management systems linked to tax records, or either creating a dashboard which is linked with the with the tax records. Um, Analytics tools to flag discrepancies and unusual transactions. We can also use AI tools or AI analytic tools. The good part is when human beings are auditing, of course, we do the sampling, but when it comes to AI tools, um, uh, with this technological tools, the sampling size is almost 100%. So the chances of discrepancies are very, very rare. Workflow automation for approval and compliance monitoring. So we need to make sure that it's kind of like an internal control process also, that there's certain approval culture which is being monitored also. The other one is automated VAT return and excise filing tools. Of course, the filing will be done manually, but as long as the accounting, if the proper data has been inputted in the accounting software, it will kind of like provide us or generate us a monthly or quarterly VAT statement, which will help us in filing the return. VAT and excise tax specific modules in accounting softwares. Um, yes, Muslim, next slide. So automation preventing VAT errors. The first one is the UAE-based retailer integrated VAT automation in ERP. Um, the second one is early identification of VAT underreporting avoided FTA penalties. So if there's any issue and you identify it way in advance, um, it might save you some money and not get you involved in penalizing. The third point is real-time reports, improved compliance, and the investor and shareholders' confidence. Reduced manual errors and increased filing accuracy, along with saving a lot of time. Awesome. Next slide. So when it comes to staff training and awareness in UAE tax compliance, there are different situations. Uh, there has to be a regular updates about UAE VAT, because I mean constantly we are seeing that so many public clarifications are issued every other day for VAT, for CT, for excise. So it's better for us to keep ourselves updated um, regularly. The second one is cross-department workshops to improve documentation and process awareness. So having like cross-departmental workshops will, of course, first give the perspective to employees of having a bigger vision, and also knowing that how that things are being done in a bigger scale, and how can he improve it further. um, the third point is scenario-based training for common UAE tax audit risks. So once the common tax issues have been identified for some certain company, they can do one precise training for those risks. Tracking training effectiveness with assessments and refresher sessions. So once the training has been done, um, uh, on a quarterly level, or on a 6 months period level, it needs to be seen that what is the effectiveness of it, or it needs maybe a refresher course if it is required. Then it can be done also. Mozum, next slide. So when it comes to roles and responsibilities of tax compliance in UAE, the bookkeepers maintain accurate financial and tax data. For finance managers, ensuring alignment with tax regulation is equally important. Tax specialists handle filing and liaise with the UAE the UAE regulatory authorities. Senior management supports compliance culture and resource allocation. Internal auditors assess controls and compliance effectiveness also. Muslim, next slide. So with this, this is the time for our third poll question. What internal controls help prevent tax filing errors? The options are segregation of duties, a single person handling all tax work, ignoring system alerts, delayed reconciliation. Your time is 30 seconds. The time's up. 81% people have answered correctly, that segregation of duties will help preventing tax filing errors. For 12% people have answered delayed reconciliations. But I believe that the ideal answer was segregation of duties. Muslim, next slide. For clear role definition prevents UAE tax penalties. Uh, Logistics firms, unclear responsibilities led to missed VAT filing. So it is very important in any company that there is a uh, proper hierarchy culture. When I say hierarchy culture, of course, there has to be some certain JDs allocated to some certain positions, and everyone should be well aware of the responsibilities and the expectations that have been um, from them. So, not having them, of course, will lead to problems, as we can see in our logistic firms. Unclear responsibilities led to a missed VAT filing. Um, Reassigned duties and formal workflows reduced non-compliance events. Um, and post-implementation audit showed zero penalties for 2 years. So once the duties have been assigned properly, as we can see that the non-compliance was reduced, and there was zero instance of penalties for almost 2 years. So yeah, Muslim, next slide. Managing timing differences under UAE corporate tax, recognizing taxable income based on the corporate tax guidelines, not just accounting profit. So there has to be, it needs to be understood that accounting profit and taxable profits are two separate things. So for that, it is very important to recognize the guidelines which are mentioned in the corporate tax law. Adjust for timing differences such as accrued expenses and prepayments, and also, as we mentioned, accelerating or delaying the invoicing process. Document deferred tax positions with forecasts, communicating time differences clearly in the audit schedule, along with the reasons. Muslim, next slide. A deferred tax timing misalignment. A UAE manufacturer prematurely recognized deferred tax asset without profit forecasts. So, auditor rejected the deferred tax asset, increasing tax payable, which is a liability. Implemented revised deferred tax recognition aligned with the guidance. So it's better to make sure that uh, you only recognize deferred tax asset if there's like a forecast for the profit in the future. Mozum, next slide. Importance of regular tax reconciliations, monthly reconciliation of VAT returns to accounting ledgers, reconciling the excise tax stock and movement reports with the tax filings to make sure that the stock that has been reported in the accounting is the same that has been reflected in the uh, excise tax portal. Um, Aligning corporate tax computation with financial statements and making sure that both of them either reflect the same, or if there is a difference, then of course the difference needs to be justified by making a reconciliation and showing which expenses are disallowed and how the working has been done. Early discrepancy identification reduces audit risk and the risk of penalties also. Mozum, next slide. So this is an example. Reconciliation saves VAT penalties. The first one is it reinforces compliance procedures and controls as everything is looked in a proper way. Corrections made before FTA audit, avoiding penalties, and a wholesaler's monthly VAT reconciliation detected overstated input VAT claims. So if there's any error, once the reconciliation has been performed, it can be discovered easily and corrective actions can be taken then. Mozum, next slide. So this is the time for the fourth poll question. What is the main benefit of pre-audit reviews? The options are delay tax payments, increase penalties, identify and fix issue before external audits, avoid documentation. So what are the main benefits? Your time starts now. Your time is 30 seconds. The time's up. 100% people have answered it correctly. That the main benefit is that it identifies and fixes issues before external audit. So for pre-audit, there has to be like a certain timeline and schedule and a proper plan that needs to be made. Most of the companies, in reality, they don't do the pre-audit or they don't go for it. Uh, but it is gonna save them ultimately a lot of time if they go through this process. Was the next slide? So when it comes to auditing red flags in the UAE tax compliance, there are like large and unusual journal entries near the period end, either before the cutoff date or after the cutoff date. If there's any unusual entry, will be treated as a red flag. Missing or inconsistent VAT invoices. I mean, if there's no consistency between VAT invoices, it should kind of like give a big red flag or alert you while filing or reviewing the filing. Frequent manual adjustment entries in tax accounts with no proper supporting documentation. Um, Delayed or missing tax filings. This is also a red flag. Poor segregation of duties. Either one person is doing everything, or if there is more than one person involved, but there's no like segregation of duties. So it is kind of like a problem area. So that means proper consideration needs to be given to it while auditing. Muslim, next slide. When it comes to preparing for tax authority audits in UAE, keeping comprehensive, well-organized records for easy retrieval. So as long as the records that have been maintained, or you can say supporting documentation that has been maintained, if they are organized and structured in a proper way, retrieval will become easy. How we can organize them, of course, by indexing them and making sure that even the index of certain period are placed in certain places. Uh, Responding promptly and professionally to FTA and Ministry of Finance request. So whatever they expect or ask for should be replied to in a timely manner and in a professional manner. Seeking expert advice on complex and disputed items. So where there is any issue or there is a complex or dispute situation, of course, seeking an expert is advisable. Using audit feedback to improve control and processes. Mazum, next slide. The summary and key takeaways from the today's UAE tax compliance webinar. One, a strong and proper documentation and accurate classification needs to be maintained to prevent the penalties in the first place. Leveraging technology for automated and reliable compliance. As much technology can be used, it should be used, but of course, it should not be relied upon it 100%. Ultimately, there should be a human being's professional judgment also being involved. Because as we say, there's like a giga model. Giga model is what you give in goes out. When in situations when the reliance is applied way too much on the technology, sometimes maybe the data that has been inputted is not correct or it is not consistent. So there always has to be a professional judgment also involved. But taking help from technology, it is it is fine and it is good. Regular internal reviews and reconciliation reduces the audit risk. Of course, there has to be monthly reviews and reconciliations being performed. Um, Clear roles and responsibilities foster accountability. There has to be a proper structure of um, you know, uh, uh, team members in the company, maintain like showing, first the authority levels, second the responsibility levels, and how the process of the work is gonna flow. It will, encourage the accountability concept, and it will lead to less or lesser of the risk in future. Continuous staff training ensure up to date compliance. So this is of course very much important as we talk about technological advancement. That means there has to be a continuous training program, either annually or quarterly, depending on the nature of the industry the company is involved in. Um, but keeping the employees up to date is uh, kind of like making sure they are well equipped to do their jobs. Awesome. Next slide. That's it, guys. Thanks for listening. Over to you, Hajra. Dirakshan.
Yes, thank you very much, Mr. Taimur Khattak, for providing such an insightful and engaging sessions. And we will now move on to the live Q&A segment. So before we proceed, we would like to let you know that the webinar feedback section is now live. We would greatly appreciate if it is our fantastic audience could take a moment to share their valuable feedback. Additionally, we also request you to leave us a review on Google by simply scanning the QR code displayed on your screen. So your feedback is important to us. And now we invite to Ms. Neetu to and Mr. Taimur Khattak to address the questions from our audience.
Thank you, Mr. Tiger, for such an insightful presentations. As Mr. Raksha said, now we would be moving to Q&A session. Okay, so we have received many questions from our audience. We will do our best so that we will answer as many as questions we can. So, Mr. Timer, we have first questions from our audience, Mr. Ali. So, the first question asked by Mr. Ali is: how can auditors distinguish between genuine bookkeeping errors and international tax evasion during a financial audit? So it would be helpful if you can answer the same.
Okay. Basically, auditors use kind of like analytical procedures and make sure that there's a consistency check, which is being also performed at transactions. I mean, are they consistent or are they not consistent? Auditors also use their professional skepticism to identify the red flags. Discrepancies that lack reasonable explanation, or for discrepancies where there is no supporting documentation also. Repeated round of figures where the same figures have been repeated um, in a certain timely manner, or if there is a situation of backdated invoices, or the invoices have been edited without any approval from the senior management, or selective document availability, can suggest that there is a intent for the error, and it's not by mistake. While auditors are, of course, they are not investigators, or they're not like police. Any suspicions or patterns, which is kind of like a red flag, must be reported in line with professional and regulatory requirements and obligations.
Okay, thank you so much, Mr. Timur. I hope, Mr. Ali, that answers your questions. So let's move to the next question now, which is asked by Mr. Raj. So is tax compliance only the accountant's responsibility? So what do you have to say about this, Mr. Timur?
So when it comes to tax compliance, okay, though accountants are playing very key role in the company, but it's not like it's solely their responsibility. It is also the owner's responsibility, the senior management responsibility, the director's responsibility. So it's like this responsibility is shared between the senior management of the company along with the owners, uh, including accountant also, but not solely accountant's job.
Okay, thank you so much, Mr. Timur. So now we have a question from Mr. I believe Mr. Shishant. So why
Mhm.
is the tax compliance important during a financial audit? So if you
Um, yeah, no, so tax compliance is very much important. The reason is, if in the financial, once the compliance status has been reviewed from tax perspective, and let's say, that the tax compliance has not been achieved, or there has been some issues and errors in the tax filings. So of course, it will lead to penalties in future, or maybe some strict action taken by government against the company. So it's always better to make sure that the company is tax compliant. Otherwise, um, the company might find themselves in a tough position or a difficult position to be.
okay, thank you so much, Mr. Kaimul. So the last question, because we have a limited time, so I just wanted to check. There's a last question from our audience. So it's just like they're asking, is the audit mandatory for a mainland companies? Because when they talk, they says that it's not a mandatory requirement. So what you have to say about this?
Okay, so when it comes to okay, saying that audit is mandatory or not mandatory is kind of like a subjective question, and it requires a subjective answer. So if someone is asking from a CT perspective, there is a certain criteria that once the company is making this much revenue, then only they have to do the financial audit. Before that, it's not mandatory. So first of all, you need to think in a perspective that, okay, for example, let's say even if you are not meeting the threshold, but maybe in future you will meet that threshold. And what if the authority asks you to provide the previous year reports, because now you have, of course, like meet the status. So this could be a situation. Secondly, when it comes to financial audit, it's not just about CT requirement. It's like an independent review by third party. So it can, even the other companies should be doing it also. If it's not 100% required from mainland company, let's say for a company which has less turnover. For example, let's say if the mainland company is having 2 million turnover, so even from if from a CT perspective, it's not required, but having an independent perspective is equally important, and it might help in discovering some non-compliance issues or some fraud-related issues or some discrepancy, which can be found in an early stage or in a timely manner, rather than being too late.
Okay, thank you so much, Mr. Thaimul. So I would be asking Miss Daraksha to take it forward, and then she would be taking it further.
Sure. Thank you, Neetu.
Thank you so much, Mr. Tamur and Ms. Neetu, for delivering such an informative and engaging sessions. And a big, big thank you to everyone in the audience for joining us today and contributing to this experience. Your presence and active participation have truly made the session valuable and impactful. And we look forward to connecting with you again in our future webinars. So until then, if you have any further queries regarding the excise, VAT, corporate tax, financial audit, anything related to the financial services, please feel free to drop us an email or give us a call. So the contact details are on the screen. And thank you so much once again joining this webinar. And thank you and goodbye, everyone.